Good day everyone, I'm Kong Xin Yi. Today I will present the introduction of our report on the impact of the COVID-19 pandemic on Malayan banking berhad as known as Maybank. The COVID-19 pandemic used major economic challenges worldwide, including in Malaysia. Many businesses faced uncertainty, reduced economic activity, and changed its customer behaviors. The banking industry was also affected as individual and business experienced financial difficulty and challenge in repaying loans. Maybank is one of the largest financial institutions in Malaysia and South Asia. It provides banking, insurance, and digital financial service. During the pandemic, Maybank faced several challenges, including of lower profit, increased credit risk, and need to support customers through the government loans moratorium program. At the same time, more customers shift to online and digital banking service, requiring Maybank to accelerate its digital transformation efforts. The main objective of this report is to analyze the financial and operation impact of COVID-19 on Maybank, identify the challenges faced by company, and evaluate the strategy implemented to maintain business continuity and support customers during this crisis. This report covers the period from 2020 to 2024, allowing us to examine both of the pandemic period and Maybank recovery afterwards. Through this analyzing, we can better understand how Maybank successfully managed its challenges and maintained its position as a leading financial institution in Malaysia. Next, I will pass the report to the next person.
The COVID-19 pandemic created unexpected challenge for the banking industry, particularly for Maybank, Malayan banking berhad Maybank. Malaysia, a largest financial institution, the implementation of the Movement Control Order MCO, economic slowdown, and uncertainty among businesses and consumers significantly affected banking activity across the country. As a leading bank, Maybank faces difficulties in maintaining a profitability, managing credit risk, supporting customers affected by financial hardship, and ensure a business continuity during the crisis. Many individuals and businesses experienced reduced income, leading to repayment difficulties and increased the risk of loan defaults. Furthermore, challenge in customer behavior accelerated the shift from traditional banking service to digital banking platform. They required Maybank to invest heavily in digital transformation while maintaining operational efficiency and cybersecurity. The bank also faces declining demand for certain financial products, stock market volatility, and uncertainty regarding further economic recovery. That's all from me. Thank you.
A very good morning to everybody. My name is Muhammad Azrul Ali. So my part is financial analysis. I will present about the hook and the pandemic shocks. Between 2020 and 2024, Maybank delivered a masterclass in financial resilience, navigating the pandemic. Net profits initially plummeted 21% to 6.5 billion ringgit in 2020, squeezed by front-loaded pet loan provision and a historic interest rate cut. For the next point is the V-shaped turnaround. By 2023, operating revenue surged past the 63 billion threshold, culminating in a historic record of nearly 69 billion ringgit in 2024. This wasn't just a luck, but it was a structural pivot driven by a powerful 22.6% boom in a non-interest income from a wealth management and insurance. For the next point is a scaling and capital efficiency. This revenue growth translates straight to the bottom line. In 2024, Maybank achieved a historic cross-industry milestone, crossing 10 billion ringgit in net profit. Consequently, return on equity scale from a pandemic low of 8.1% up to highly efficient 11.1%. So for the last part is the balance sheets and the conclusion. On the balance sheets, total asset crossed 1 trillion ringgit, while liabilities grew to fund these expansions. Over 8% came from stable customer deposits, not risky wholesale debt. Backed by an elite 80% capital ratio and a shrinking impaired loan footprint, Maybank has officially emerged from the pandemic stronger, safer, and more profitable than ever before. That's all the recovery of the Maybank pandemic's COVID-19. That's all. Thank you.
To the previous presenter, next I'll discuss Maybank's response and strategies during the COVID-19 pandemic. One of Maybank's most important strategies was providing financial support through loan moratorium and repayment assistance programs. During the movement control order, many individuals and businesses faced cash flow difficulties and were unable to repay their loans on time. To address this issue, Maybank extended loan moratoriums, restructured loans, and offered flexible repayment options, especially for SMEs and affected customers. In total, the bank provided assistance approximately 165 billion in loans. Although this strategy reduced Maybank's short-term earnings, it helped maintain customer trust and prevented a significant increase in loan defaults. The effectiveness of this strategy can be seen in the improvement of Maybank's net impaired loans ratio, which decreased from 1.18% in 2021 to 0.88% in 2024. Overall, these initiatives demonstrated Maybank's commitment to supporting customers during the crisis while maintaining its long-term financial stability and market position. That's all from me. I will pass it to the next presenter. Thank you.
Moving on. I will explain Maybank's strategic planning for long-term stability during the COVID-19 pandemic. First, Maybank introduced several financial relief programs such as loan moratorium, repayment assistance, and loan restructuring. This initiative helped customers who were facing financial difficulties while also reducing the risk of loan defaults for the bank. Second, Maybank strengthened its cost management and operational efficiency by carefully controlling expenses and maintaining strong liquidity. This strategy helped the bank remain financially stable despite the uncertain economic environment. Besides that, Maybank accelerated its digital transformation by improving platforms such as Maybank To You and the MAE applications through these platforms.
Moving on to the recommendations for Malayan banking Berhad. To protect against interest rate volatility, Maybank should first focus on diversifying its non-interest income streams. This can be achieved by expanding regional wealth management fees and integrating financial products into broader partner ecosystems. Second, the Maybank must transition from reactive risk management to proactive data-driven strategies by integrating AI-driven early alerts and predictive analytics to spot potential loan defaults early. Finally, Maybank should optimize its digital capital expenditure by investing in advanced cloud-native infrastructure and expanding automation modules like straight-through processing. The bank can eliminate manual errors and significantly boost operational efficiency. In conclusion, our analysis highlights that the COVID-19 pandemic served as an unprecedented systemic stress test for Maybank. The bank successfully transformed customer behavior and expanded its non-interest revenue streams. This strategy allowed Maybank to rebound stronger than ever.